All right, welcome back. Let's dive deeper into Tesla earnings. Let's welcome in George Tsilis, senior markets correspondent for that. So, George, I'm taking a look at Tesla share in terms of the stock response. We are seeing shares a little bit higher. They were up about 4.6% heading into the close, adding to that a bit, although there has been some volatility because this was a clear miss on both the top and bottom line. But as Jeff Pierce sort of pointed out, not necessarily. Tesla's one of those companies that those figures don't necessarily matter as much as some of the commentary. I am seeing first quarter gross margins beat estimates, and the FSD timeline seems like that's still on track. What else is standing out to you?
Well, obviously, it's not a catastrophe quarter. I think a couple things to note. Obviously, the miss on EPS and, of course, top-line sales was a little bit of a surprise. But, you know, the noble reaction after hours so far just speaks to the potential of a massive decline or a potential move to the upside based on commentary. So this is a very, tricky situation for traders right now in the stock. I think if you look at one of the things that struck to me was the adjusted EBITDA margin, 14.6%. I have on a trailing basis, at least in the last 4 quarters, around 13.34%. So that seemed to be a little bit better than estimated, and I think that speaks to the potential of lower cost of goods sold. Volumes were down, and we know that overall, based on last quarter's delivery numbers, down 13%. European sales have actually been quite low, 43%. That's all based on potentially some political associations with Trump and with Elon Musk and Trump. The Model Y, and this is the challenge with that particular model, is that they're revamping it. So they're losing some scalability in that production. Cybertruck sales have been relatively weak as well. They're looking to revamp that particular model or even bring out a new, more compatible truck that's a little bit more closely aligned to their competitors. But I think the other thing to keep in mind is the energy storage business, which is quite a bit. It's close to 25% of total sales. Looks like that breakdown was pretty good, and services was around $2.6 billion. So it's kind of tough right now because this is a conference call move that is probably going to manifest. But I think the FSD rollout, there was actually quite a successful rollout of FDS in Amsterdam. High traffic orientated, pedestrian orientated areas in urban environments, and they actually had a very successful rollout. Now, that was a test run. It wasn't, of course, legitimized because of regulatory approval. That's still pending. But overall, it was kind of mixed because the margins were better, even though sales and EPS were down. And lastly, it looks like, just from what I see right now, they are not providing updated guidance until next quarter for the entire fiscal year. So things are on hold in terms of their guidance for the year. But like I said, they're going to get the stock. It's down 55% since the highs in December, but it's still higher as a company price-wise by 60+% over the last 52 weeks. So I think that's important to keep in mind as well.
Right. Although 50% from the all-time highs hit late last year. It did
Correct.
say that tariffs may cause market volatility and near-term impacts to supply and demand. So likely why they're pushing out that guidance. George Tsilis, thank you so much for your thoughts.